Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, October 13, 2017. Once again, elite membership interest list is forming, so sign up. You can also get if you sign up right now, you actually get elite free, and you'll get these elite indicators also free if you have TradingView account. We're seeing more of all-time highs on the major stock indices. I'll talk briefly about underperformance versus bearishness, divergences, which are super difficult to trade off, and what does it mean to be overbought. I think Mexican shares are poised for a rally. We'll look at bonds. Bonds of all kinds. Junk bonds are actually moving higher together with stocks, so this is confirming the bullish posture. US dollar may be ready to roll over, and gold is sensing this, I think. I'm not certain what's happening to oil or natural gas, and that's why I'm staying out of these markets. And we'll look at XLE, which could go either way. And I'll have a very brief segment at the very end, a little bit of a personal kind of experiences with trading. And if you had a bad trade, one of the ways to deal with feelings of sadness or whatever, anger, is it just use a different instrument and actually have a win. Right, let's start with S&P 500 ETF SPY. So first of all, of course, hit the like button. You know that this channel depends on your continued support. So S&P 500, basically we're back to our regularly scheduled all-time highs. And here's one on Friday. I mean, this Friday candle is not particularly great. It's a filled candle, albeit it is a black candle, so there is some buying present, but kind of like similar to these candles back here from June of this year. You can see black candles, and we saw some red candles, and so a shooting star, and then a pullback. We're definitely overextended. We are also 100% bullish. What does it mean? Does it mean that just means that I don't want to short this chart? In my brain, when I say bullish, I say I don't want to short this chart. When I say bearish, I don't want to go long on that chart. So here's S&P 500 all-time highs. I thought this was a buying climax last week. Again, the volume was relatively small for the buying climax, so I was not, adamant about my opinion. I'm not really adamant about any opinions as of late. But this is a bullish chart. Again, as of late, the market has been relatively simple. We're just simply looking for oversold conditions within a clearly defined uptrend. One day that will change. One day we'll say, oh, we have a failed trade, we have a bunch of failed trades, the market will become more difficult, and then we will switch to some other method. For example, we will shorten our targets. That is also a possibility. But for now, S&P 500 is bullish, so we will continue to treat it that way. Here's a here's a S&P 500, the actual index on a longer, still zoomed out kind of chart. This is also daily chart though, but so each stick is a daily chart. But here on this chart, what I wanted to point out is basically bearish divergences in a bullish instrument do not normally result in anything productive. So they could be just ignored. For example, you can see here RSI going well above 70% here back in May and March of this year. And yeah, we got a little pullback here. So maybe the bears were like, oh, look, we're pulling back. I basically ignore this stuff because notice that after just a few weeks of sideways to slightly down trading, we made a fresh high, right there, and then continued higher and higher and higher. And now finally in October of this year, and previous big peak in RSI was in March of this year, we're finally overbought on RSI. Again, what does that mean? And once again, I say it means absolutely nothing. If anything, RSI means, RSI in an overbought territory means that we're seeing lots of buying pressure. In other words, even at this quote-unquote elevated levels, investors are stepping in and adding to their positions. So, overbought is a measure of strength. Overbought does not mean ready to drop. Additionally, it is very difficult, if not impossible, to trade on divergences. So if you're a beginner trader, I would highly advise you from even looking at those things. S&P 500 on a weekly time frame. If you're a classic chartist, I'm not. Classic charting means that you look for various chart patterns and then look for breakouts or breakdowns out of those patterns, and you can place your bets accordingly. Here we had a clear triangle consolidation. You can see this is a weekly chart of S&P, so you have an inside wick right there. So this red candlestick from 1st of September is within the August candlestick here. So afterwards we had a breakout with a close above the trend line from the triangle, and then we continued higher to fresh all-time highs. So on this particular chart we have multiple triangle consolidations. All of them resulted in bullish outcomes. Sometime in the future, I'm sure we'll have a triangle consolidation that will result in a bearish outcome, and that's one of the reasons why I don't really worry about those patterns too much. I am more worried about where the price is relative to recent highs, lows. QQQ it was a little bit underperforming back here in September. I sent my subscribers a note, something to the extent of this is most likely an opportunity versus any kind of reversal into a downtrend. I just don't see it. I mean, we see all-time highs and advanced decline lines. The actual indices are making fresh highs as well. So participation is very good. I don't feel like we're the stocks are not participating in the advance. Here's a weekly time frame for QQQ. Once again, bearish patterns in the clearly bullish security normally do not work out, and this is why I repeat. If you listen to my previous videos, I repeatedly warned about shorting QQQ, and notice that we are again at fresh highs. So this is a clearly bullish security again. Here's IWM on the daily time frame, the small caps ETF. Here back in August, a little bit of underperformance. Some traders chose to interpret this close below August in August below the 200-day moving average as a bearish omen. I said this is simple underperformance, and we actually opened the position as well. Now we have two targets and fresh all-time highs, so this is looking clearly bullish again. On this chart, yeah, again, IW, I'm sure it's overbought. That means pretty much nothing. Overbought just means it's strong. So look for a pullback and then buy it, basically. It's pretty straightforward. XLY, consumer discretionary, and this is extremely economically sensitive fund. You got restaurants, discretionary spending, basically Nike, Amazon, Home Depot, all of that good stuff. We're approaching all-time highs again. So back here in August, September, I said that this is a buying opportunity for my subscribers, and hopefully we open the position. I mean, I hope you guys open the position. XLP staples, again, this is an underperformance sector. I don't think it's bearish. I mean, there's some quality stocks in this fund, so I would be looking for only buying this fund. I don't want to short it for sure. XLF financials, once again, this turned out to be an opportunity. This dip in August, September turned out to be an opportunity, and it rallied to fresh all-time highs. Now, the day before yesterday, on Thursday, we had this big bearish engulfing here, or relatively big. Don't know if it's a true bearish engulfing, but I think it had to do with bonds gaining once again, and there are a lot of banks in this ETF, so if bonds gain, then the profit margin of banks shrink, because when bonds gain, yields drop, and banks make money by lending at higher rates than they borrow. So in this case, yes, we see a little bit of a downward pressure on banks, but I don't think it's that strong, and I think this is a bullish chart once again. I would not short it. Utilities, pretty much same story. Twice in the past 3-4 months, we opened the positions based on basically oversold conditions, and there they are. I have myself opened utilities very recently, so I think yeah, this is a bullish fund. I mean, all-time highs on advanced decline line, so I would not short this chart. Here's an interesting idea for you guys. This is EWW, Mexico shares, Mexico stock market. This is showing my elite indicator lines, and you can get them at MasterChartsTrading.com. This is also a bullish chart, I think. Here is the breakout right there in April of this year. Even here back in March of this year, I would already be very interested in this stock fund. And now we have a breakout and then a pullback to the green line. So far we failed there, but looks like we dropped below, and we're trying to find support around the blue line here at around 51.60. So I am personally very interested in buying this one. I think this has to do with the fact that Mexican peso weakened somewhat against the US dollar, but I think again this is a temporary thing, and once again, if I was trading Mexican peso, I would be buying it now. But as far as stock market itself, I think it's bullish. I would continue buying on any and all pullbacks should they come in. Thanks a lot. And let's wait for the bonds next. All right, let's move on to bonds. First, let's look at junk bonds. This trade almost like stocks, and this chart is a daily chart, and this chart includes dividends. With dividends, these are all-time highs. So again, I don't see a tap-in pattern. Even this big sell-off turned out to be an opportunity, and for now, again, I mean, we just keep pushing and pushing higher and higher. I mean, the yield is dropping, but eventually investors will say, okay, this is enough, and then they will stop buying at these levels. Maybe we'll get a pullback, maybe we'll get a stronger correction, but the problem is we have no idea when that will happen. So for now, we're simply continuing with our trend following. Here's an interesting one. Preferred shares, looks like a possible double bottom here around the same area, 31,192. So could be a bottoming pattern here. Let's move on to the most important ones, which are TLT. This is 20+ year Treasury bond fund, very heavily traded fund, and this is a little bit choppy, and surprisingly TLT is actually more volatile than S&P 500 SPY. So you'll have to adjust your position size for volatility. And I actually, by the way, I was going to say that I do teach this at MasterCharts Trading, and you can get an Excel spreadsheet which can dramatically, help you with position sizing if you sign up. Anyways, here TLT 2017 high. I think this is a bullish chart, and I personally have a position in TLT as well on the long side. So I think we could break out above 2017 highs and continue higher. And the weekly chart is actually quite telling. So notice here, last week maybe you heard me saying that we had a moderate selling here, but look at this big hollow candlestick, and this is a weekly candlestick, and with a partial gap and a push higher, very strong candlestick. So here I see I think we have probably bottomed for bonds, and we'll most likely continue higher from here. Okay, let's continue with the currency analysis. Here is US dollar on the daily time frame. This is US dollar index. So possible double top here, 94 area with a shooting star, a gap, and a confirmed shooting star. So there is rejection in this area of 94.10. Well, let's look at it with the help of some of my indicators here. So this is DXY, same thing on the daily time frame. I think we're now in a bear market for the US dollar index, so I would be shorting it at the yellow or the light blue lines. If this index was to get up to like 99, I would be questioning my bearish assumptions, but for now I think we're bearish. So US dollar on the weekly time frame here, as far as candlestick analysis, somewhat indecisive the past 2 weeks, but again I think this is a bearish chart. Euro versus US dollar possibly has found support here on the weekly time frame at the breakout level. Maybe it looks a little too easy almost that it found support exactly there, so maybe there'll be more perturbations. We'll see. And here's an interesting idea: US dollar versus Mexican peso on the weekly time frame. And I would personally, if I was trading it, I would be shorting it right now, or maybe a little higher, maybe around 19.16 or so. But even right now would be okay. I think this is I think Mexican peso is in an uptrend versus US dollar basically, or you can short Mexican peso or you can go long Mexican peso by shorting US dollar versus Mexican peso pair. Okay, let's move on to gold analysis. Here's gold on a daily time frame. So here what we have is a breakout in August of this year to above previous highs, above previous peaks, fresh 52-week highs, deep pullback, normal deep pullback. Notice here we have a hammer-like candlestick and then a gap next day. And this occurred on, let me see what day that is. This occurred on 10th of October. The gap occurred on 10th of October. So this so far is proven, well, I'm bullish on gold, and I'm thinking that we're gonna break out above 52-week highs here, because most likely the dollar will continue lower. Here's gold on a weekly time frame, and here's what I mean. There's this gap here, there's a gap up. So even weekly looks like a hammer candlestick with a gap up, and it looks like a very bullish candlestick actually last week. So I think in general gold most likely will continue higher. So I actually have a GDX position open that I opened recently, and GDX moves together with gold. So if you like to trade a volatile security, GDX is like nice for you. And I occasionally like to trade GDX. So far so good. It's moving in the right direction. I think it's got stopped right there, the 200-day moving average too. So maybe there's some support there. Here's a weekly time frame for GDX, and notice there's a bullish engulfing pattern on the weekly time frame with a confirmation from this week's candle. So it looks like we have two very nice bullish looking candles here on the weekly time frame. I have a strong suspicion we have bottomed from this pullback, and I think we are ready to break out above 25.86. Okay, let's move on to commodities. Here's West Texas Intermediate light crude oil on a weekly time frame. It could be that I am proven wrong and we have possibly switched to bullish trend. So I am less and less inclined to short this chart. For example, here's Brent oil, and these are actually, well, multi-year highs, 58, and there's multi-year highs here. So I am less and less inclined to short oil as of late. I actually had an open position to short oil. I shorted it. I did not like the action. This action right there, because you can see there's a big red candle and there was no follow-through. I was hoping we get a follow-through. This is on Friday the 6th, and notice on October 10th, on Monday the October 10th, we had a gap up. So I closed my position, the short, and I am staying out of the market right now. Because I am not sure about this chart, and when I'm not sure about something, I will stay away from it. So here's US oil with my indicators on it. Notice this up here are gonna be 52-week highs, and I'm reluctant to admit, but I think I might be wrong here. Maybe oil will break out to fresh highs, but this is why I am not trading it, because I am not sure. UK oil. In other words, I have no positions right now. Here's UK oil, which is Brent. Notice that we have a breakout here and fresh highs. So I am more and more reluctant to short oil. Maybe I'll go long. We'll see. Here's XLE, and this is actually surprising strength in energy sector. So perhaps energy sector is overdue for a rebound. And here is XLE. And where's my notation? Time to short XLE. I'm not sure. Maybe it's not time to short XLE. We'll see the behavior, especially if we get a breakout above 72.20. I would definitely not want to short it. In fact, I may want to look on the long side. Which actually I'm gonna bring me to another point that I'll make at the end once I get there. But briefly, natural gas. I am not sure about where this is going again as far as natural gas. And as a result of me not being sure, I thought we were bullish until very recently, and we were trading it on the long side. But notice that we had a bunch of, this is actually my actual chart that I sent to my subscribers. We had two sort of failures here. I mean, we could have potentially make it a break even. Just depends on where you put your stop. This latest one was a profitable trade because we got the first target, but it just depends where you exit and stuff like this. But finally, I sent an exit alert here in September, and I'm kind of staying out of it because, again, I'm not sure where this is going. UNG in particular is a lousy vehicle to trade, but the important thing is here is the natural gas futures chart, and I am now more and more concerned about the possibility of this breakdown, so maybe it's time to short natural gas of anything, so still have a question mark here. Okay, so let me just make a very brief point about this chart. So here's XLP, and when I send to my subscribers, I usually distinguish between my positions that I actually open myself and those that I simply send alerts about. So here is on this position, I have my actual entry at 55.58 back in June of this year, and notice that this was a failed trade, so I closed it out. But then in July, I felt like there was significant buying pressure, and I sent out an alert for my subscribers. Notice that we went to first target. Actually, you had plenty of opportunities to close at a profit, or at least at a break even. But notice that initially I sent out that I actually opened it here, but the next one I didn't take. And this is sort of my own thing, is that if I have a failure on one instrument, I need to see a success on another instrument. And this is just my thing that I do sometimes for myself, so that I don't get frustrated too much. Because sometimes it's like, I want to get back at this stock. I just want to buy it and make money off of it. But then you're like irrational and you're making stupid decisions. So this is what I usually do myself. I kind of say, okay, I'm not going to trade this stock because I had a failure on this one just now. I still think this is a good trade, and in fact, I sent it to my subscribers, and subscribers made money on this. But to me, psychologically, it just feels better to stay out of it, and then when my head is clear, we can start trading it again. So that's just one of my things. Okay, so very briefly, I am currently doing trade alert services, and you can sign for them here. So I have 3 levels of memberships: monthly, 6 months, 12 months. You get lots of information. I think the people are really, the subscribers are really happy about the training part. So there's lots of good training videos here, and just my thinking about how to approach the market, how to position yourself, how to calculate your position sizes so that you don't go broke. And there's lots of good information there. But the important thing is that currently I'm launching a new service level, so this could be considered like a basic service level. But I'm launching an elite service level, and there one of the primary things is that you get to use this elite indicator that I will share with you if you have a TradingView account, which is free, by the way. And with it you can trade, pretty much stocks, bonds, pretty much anything, so long as you follow my rules and instructions. And it's actually quite robust. For example, you can trade gold. Here's gold. You can buy or sell at the green, blue, light blue lines and yellow lines. And I explain all of this. Is actually extremely simple, and this is why I'm really liking this new elite interface. It really helps to cut down on the analysis and just concentrate on trading. So the subscribers are really liking it, and what the kicker is right now is that since I haven't actually launched yet, and right now it's October 2015, or rather October 15, 2017, so I haven't actually launched yet. So if you are interested, you can sign up right now and get the elite membership for free, so long as you are already a member at the time of Elite Go Live. So this is a great deal, because here's a $24.95 deal, but you can get it for as little as $20.82 if you sign up for 12 months. What's nice is that once you're signed up for this monthly membership, currently in October of 2017, you will also get Elite for free. Later on, it will be around $40, so I would highly recommend you guys sign up. All right, that's it for this week's recap. If you have any questions, please feel free to contact me. Here is the help, and you can contact me there. And I am very quick to respond. So once again, thanks for watching, and have another great trading week. Bye-bye.